All right, we are talking about the real estate sector because certainly in the rising rate environment and concerns about office space and what that looks like, it has been a sector that has underperformed, not just in Canada, but globally. If you take a look at the global benchmark for the real estate investment trust, it has struggled against the broad market. You can see that there with the MSCI All World Index. Our next guest says maybe things could potentially turn around. Let's bring in Corrado Russo, managing partner and head of global securities at Hazelview Investments. Thanks so much for being with me.
Thanks for having me.
So is it all about rates? Is that kind of, if rates were a headwind in 23, they're going to be a tailwind in 24?
I think that's right. It has been about interest rates. If you look at the fundamentals over the last 2 years, has actually been as best as we've seen them in a couple of decades. Demand has outstripped supply. The focus has been on office, which obviously has had its difficulties from the work from home trends coming out of COVID. But you look at apartments, you look at industrial, look at healthcare, cell towers, data centers, they've all had tremendously strong rental growth, occupancy growth, but nobody cares. It's all about interest rates. And even though their earnings growth has been double digits for the last 3 years, every year compounded, the multiples are down 35%.
Well, let's talk about that because real estate is sort of this physical thing and you can buy it, you can go out and buy the piece of land or you can buy a security that tracks that. And the point has been made, what other asset can you buy the asset via security at a 30 to 40% discount, right? Like a lot of these equities are trading at such a steep discount to their net asset value.
Yeah, I think that's right. Ultimately, a security, all it is a company that owns the private assets. And so buying a building publicly versus privately, at the end of the day, you get the same rental stream, out of both. But yeah, because of negative perception and because you can vote with your feet by selling a stock, they're trading at significantly deep discounts. In fact, the discounts today are the biggest we've ever seen them, even during the financial crisis, which is obviously hard to believe. So our view is that as interest rate becomes a tailwind rather than a headwind, we'll start to close that gap to where private real estate
and is that where we're going to see maybe a little bit more dispersion? Like maybe office does still get left behind, but then the quality that you're speaking about in industrials or apartments, they get a chance to re-rate?
I think that's a great point because you can't just look at where private market values were last year or the year before. You've got to have a view on where they're going. And for certain asset classes like office, for example, you have a downtown high-rise building, you're probably going to see a lot less growth or perhaps a decline in values. But when you look at assets like apartment buildings, like industrial, healthcare, cell towers, data centers, so many other sectors that kind of get ignored, the value's not only not going down, but potentially going up on the private side.
When do you say enough is enough, though, in office? Like there has to be value there. Is there anything tempting, or what would be your lens to get opportunistic in office?
Yeah, I think we're getting there, and I do think you have it right. You want to be opportunistic. And what's interesting when you start looking under the hood in office, what you're seeing is actually the higher quality assets that have great amenities, state-of-the-art HVAC systems, technology packages, good locations are actually doing quite well. So even though the vacancy of the overall industry is high at all-time highs, for good quality assets, it's actually much lower, and they're actually seeing some rental growth. So we think the office market could be sort of a winner-take-all mentality, and I think if you can buy right, buy in the right location, and today, because of the pricing, you can get a pretty good going-in cash flow stream so that you don't need a lot of growth to get a pretty good return.
The role of tech companies had all of a sudden become very important for office, and then that kind of pulled back in a major way. And they're the ones kind of still leaning into this hybrid approach. Do you ever see that coming back, or like who fills that role of the tech tenant?
Yeah, I mean, obviously you can ask 100 people, you might get 100 different answers. I mean, I think from my perspective, I think from the tech world of the 5 days a week in the office work week is probably not coming back anytime soon. I do think the hybrid is here to stay, but that doesn't necessarily mean it's bad for office. And what I mean by that is generally where we seem to be settling out, and we're seeing our tenants is they want the employees to come back 3 to 4 days a week. They want that collaboration. They want that teamwork in the office. And they are seeing the benefits of productivity of being in the office. But if you think about it, we're focused on the average occupancy of office. And because you're home 2 days a week, the average occupancy is going down.
Yeah.
But think about which 3 days of the week people are coming in. It's Tuesday, Wednesdays, and Thursdays. And so as a tenant, what they're realizing is, I can't manage my space needs to the average occupancy. I need to manage to my peak occupancy. And so if everybody's in the office on Wednesday and I need everybody in for meetings, I'm still going to need that space that's required.
As you look, we've been talking about it kind of on a global basis, but as you look into countries, are certain countries more discounted, less? How does Canada kind of rank and fit?
It's a great point. So if you look at the public markets, they're generally, everybody's been discounted around the world. But if you look at the private market where there's more institutional capital that's focused on long-term investments, what you're seeing is North America, both the U.S. and Canada, is being discounted much more than in Europe and Asia. And a lot of that has to do with culture as well. If you think about the European culture, going to work, most of our friends are at work. That's part of our entertainment. We go to work, we go for a drink, we go to dinner, and then we head home. And if you think of Asia, it's all about FaceTime with the boss, being there, showing your face, getting collaboration. And if you look at the average space that people live in and employees live in, it's much, much smaller than North America. So having a home office, having space to work from home becomes much more challenging in some of those areas. So we're actually seeing great opportunities on the public side in Europe and Asia, where the private market values are holding up, but the public markets are being thrown out with the baby with the bathwater.